Good evening, everyone. This is FX RBS, and we are with the Monday class. Tonight, we'll talk about price patterns and especially where is the proper place to look for all those patterns. Most of you guys probably have been watching previous classes where we explain all the patterns, how to enter, where to place entries, stop limit orders, and we know that we have a couple of continuation patterns like trend continuation, and we have a few trend reversal patterns. Continuation patterns are Gartley and
Unmuted.
Continuation patterns are Gartley and Bath, and the sound is back, guys. I see somebody is saying that the sound is gone. Okay. So Gartley and Bath are continuation patterns, which means that if we are in a downtrend, we're going to look for bearish Baths and Gartleys. Now, reversal patterns are crab, butterfly, and head and shoulders, and we would look for those patterns somewhere at place where we anticipate that trend will probably reverse, and this can be big support or resistance level. And when I say big, that means that this is a level coming from higher time frame, maybe 4-hour or daily or weekly time frame. And we know if we have such a level, we have high probability that trends might reverse. And in levels like that, we're going to be looking for reversal patterns. And I will give you an example once we start looking at the charts. And for example, what we see here is 4-hour euro-dollar chart. We see price in a downtrend. This is our downtrend line. This is a long-term downtrend line. There is also this horizontal trend line, that was horizontal line that we see is past support becoming resistance, kind of horizontal line. And what we have here is 2 Fips, 1 put for a main downswing. And then we have also a sub swing going up. We can see a couple of convergences here. One at the 618 with 127, and then we have another convergence at 786 with 1618. Now those levels are levels with high probability, and what I mean by high probability is that there's a big chance that price will reverse at those levels. We can't say for sure that price will reverse, of course, at this level, but this convergence gives us higher chance that price at least might stop and bounce around this 132.45. Now, even on the 4-hour chart, even if we get a small bounce on the 4-hour chart, and we can say that this current swing is like a small bounce. Well, a small bounce on a 4-hour chart is like 350 pips now. Look at it this way: on a smaller time frame, if we can profit 350 pips, that's great. Or even if not this, but when we know that price has a high chance of bouncing off this level, those 350 pips on a 15-minute chart will look like a long trend, and we'll have a chance to trade short for a big number of pips. I will give you an example. So we open a daily chart or a 4-hour chart. We find us a level where we believe price might reverse or at least bounce. I will draw this horizontal line below the low. It's converging very close with the 618 and the 127 convergence. Now this becomes a very strong level. And also we see that the trend line, the downtrend line, is coming. So there is a big chance that market will do something like this. Price has been in a downtrend, moved up, it's making a subswing, and from here it's going up for the resistance or the trend line. And this looks like a bearish Gartley. Now this is a 4-hour bearish Gartley. It is hard to trade a 4-hour bearish Gartley, but now we know that we have the convergence of the Gartley 618 and 127, and this convergence is happening near and possibly near trend line. Now, so we're starting to build a case now. We have the Gartley, we have the trend line, we have this path for becoming resistance. Now there is a lot of resistance around this level. So we'll mark 132.45 just to pay attention to this level. Now we know that there is a chance that price might reverse at 132.45. During this presentation, if you guys have any questions, feel free to ask your questions here in the questions box. So now I have this level at 132.45, and when price starts moving, and of course we'll move in some small swings up and down. Once we get close to this level, what I'll do is I'll go to a 15-minute chart or 1-hour chart. We said that the level was 132.45. This is the level, correct? 132.45. And I'll actually color it red, make it a little thicker. Now this is the level we believe market will at least bounce. Well, until that price gets there, the price will move some swings, and as I said, here on the 1 hour or the 15-minute time frame, we are in an uptrend going towards that level of 132.45. Now once we get very close to that level, market price might form something like this. And what is that? This is a bearish butterfly. Now, if the market gives me a bearish butterfly at level that I believe from a higher time frame, that is reversal level, this is a very high probability trade. And I know that, okay, on the 4-hour time frame, yes, I wanted to short that 132.45 level. And here I come to the 1-hour time frame or the 15-minute, and that time frame confirms that level and it tells me, yes, there is a possible reversal at this level. So this is where I would be looking for a butterfly. Now, if I see a butterfly somewhere here, now the market formed a butterfly, but this butterfly, it's, I can say, in the middle of nowhere, and nothing can back that butterfly. And guys, you will see patterns all over the charts, but the patterns with the highest probability will form at stronger level, and this is a strong level because the 4-hour time frame is confirming that same level. And another key, because I get this question all the time, is, oh, it's so hard to look for those patterns. I pull fibs from everywhere. Where should I look for the patterns? And this is how we can kind of filter all the areas from looking for patterns. Now, this from down here to up here, this is almost 700 pips. Now, for all those 700 pips, we know that here we don't need to be looking for butterflies. But over here, if the market forms a butterfly here at 32.45, we can sell it. So this is the only area where I will focus to look for those patterns. I wouldn't be looking for a butterfly here or here or here. Now, some of you guys might use pattern recognition software, and it's fine, and you'll see a lot of times those patterns will fail. The stronger level we pick, the higher the probability that this pattern will work, that the pattern will work we have. And the same thing. Now, once this pattern is completed and we are in a downtrend, I won't be looking for any more bullish patterns. Now here, once we fill this pattern and price starts moving lower, I will go again to the 1-hour time frame or 15 minutes time frame, and I will start looking now for bearish Gartleys, because I know that the Gartley is continuation pattern. We're in a downtrend, so I will be looking for downtrend continuation patterns which are Gartley and bath. Now if the market forms a Gartley, I'll take the Gartley. If the market forms a bath, I'll take the bath. But I will be taking bearish patterns, and I will be taking all those bearish patterns all the way until this support level, or until price forms another bullish pattern on a higher time frame that tells me, okay, yeah, we're done with trading with the bears now. We'll start moving bullish, or maybe we will see a fundamental announcement come out and reverse the trend. There is a question of if there is any percentage of, any time frame that I would like to trade the patterns. Now, the patterns can be found on any time frame, but the thing with all the patterns is, like, if you find a pattern on a daily or 4-hour time frame, you will need huge stop. So what I do is, if I find myself a pattern on a 4-hour or a daily time frame, like here, now if we want to trade this pattern correct, we need to place stop above the X, or we can wait for candlestick formation to form here at the sell level and place the stop above the candlestick formation. But what I like to do is, when I see a big pattern like this, I would go to the smaller time frame and try to find another pattern. Now, it doesn't necessarily mean that it has to be a bearish butterfly. Now, of course, the market can form a different pattern. What other pattern we have? We have a crab. Well, the crab is close to the butterfly. So I'll give another example. Well, market can form something like this. Even though price went up above the sell level, that's not something bad, and price comes down, takes that previous low. Now we have a big chance of a head and shoulders being formed. And guys, I won't draw it perfectly, but it's so you can get the point. I will still try. So we have the trend line. We know that when price breaks the trend line, this is good signal for trend reversal. And also, in an uptrend, price is making higher highs and higher lows. And here we have higher lows. And of course, we have higher highs. Now, when price will reverse, it will stop making higher highs and higher lows, and we'll see a lower low form. And here we'll have a lower low, and we'll start trading bearish. Now this is head and shoulders. A lot of times we'll see price bounce off the backside of the trend line, and most of the time the right shoulder is formed near the left shoulder. So what we're looking for is break of the trend line. If possible, this last low that we have to be taken, so we can start forming lower lows, not higher lows. Now this is the first lower low that we have, and it's lower than the previous one. that gives us an indication of trend reversal. And then price will form the right shoulder, and here at the right shoulder is where we like to enter. Now, of course, there's all different kinds of strategies that you can also enter at the break of the neckline, and this is the neckline, correct? But I like entering my head and shoulders patterns at the right shoulder. Most of the time, by the time price comes all the way down to the neckline, I'm already gone. I already have taken the profit. I'm out of the trade. And I would enter if price breaks the neckline, comes back to retest the neckline, and this here can be my second sell. So I will have first sell at the right shoulder, and then I can add to my position, or I can limit the entire first position and then open a second one. At the retest of the neckline. And this formation here, all it does is confirms the 4-hour and that level here. So the main point is finding a level coming from a higher time frame. This level will provide a lot of support or resistance, of course, depending on if we're in an uptrend or a downtrend. And then we'll go to a smaller time frame, and what we do is we simply fine-tune the entry. And what else this does is it eliminates the extra job, because I see traders all the time, they search for patterns all over the charts, and this can be very, very time consuming. And now after I look at this chart, I would know that until we get all the way up here, I have absolutely no reason to look at this chart anymore. Now, the only thing I can do is go to 15-minute time frame and try to find bullish, small bullish patterns on the way up. But those patterns will have a lot lower probability than the ones here at that level, because I can't be sure that price will go all the way up there unless there is a fundamental announcement that's moving the market bullish. And right now what we have on the fundamentals is that Europe has pretty much decided that a bailout plan, and they will need about $1 billion in loans to help and bail out those countries. But the decision is made, and probably we can see some stronger euro, or at least if it's not stronger, maybe euro won't be as weak, because before we have had too much uncertainty of if Europe would like to help Greece and some of those other countries like Spain, Ireland, Italy. So here we can look for bullish patterns, but as I said, the probability of those patterns will be a lot smaller. Just to finish what I started here on the 4-hour, but I wasn't about to say that now I can't be sure that price will go all the way up here, all the way up to 132.45, and this is why those patterns, bullish patterns that we might find on a 15-minute time frame, won't have this probability. But I know that we have a lot higher chance, at least, of a bounce once price is all the way up here, because we have the convergence, the trend line, past support becoming resistance. Now we have a lot of factors around that level. So this level is the level that we would want to trade. This is how I would eliminate all the extra work of searching for patterns everywhere. And when I have all this, I can move on to the next pair and look for trading opportunities. Now, of course, there will be a lot of scalps that can be made on those pairs. Now, if I go and see a pennant or a flag somewhere, of course I can trade it. Now this is the Sunday candle. Nobody would have been able to trade that. But we can always trade small patterns. We can find patterns everywhere in the charts. Now, when talking about pennants, flags, or breakout of consolidation, I like to trade those patterns at opening of a session. So if we have a pennant forming before the opening of the UK session, or before the opening of the Asian session, this is a good place, good time to trade those patterns. Now, I don't really like trading the opening of the US session, because there is a lot of movement, a lot of news coming out. Still, there is folks from Europe trading. Some of those folks are closing positions, and most of the time when we have Europe and US open, we can see some big moves, but most of the time when we look at on a higher time frame, those moves would look like a spike. The price will go in one direction, will come back. Not very comfortable for traders to trade at this time. At least I don't like trading between like 5 and 7. 5 and 7 this specific time in the morning. Once UK closes, that's a different story. But I don't really like trading the opening of US unless there's like a new straddle. Let's try to give another example. Now here, this is USD Canadian. And USD Canadian has been trading in this bearish channel for a very, very long time. It's been in this channel since mid-2009. Now, since we know that we have this channel formed, of course now we're on a daily, we won't be able to see any patterns. But when price was somewhere here, we have the channel. What I do is, I would say, okay, this is a good place to sell. I'll measure that place, that price. This is somewhere around 109.80, 110. And I would go to 1 hour time frame, 15-minute time frame, start looking for bearish patterns. I'll trade the bearish patterns. Then once we start moving from the top side of the channel, I'll be looking for bearish continuation patterns all the way down to the bottom side. I will be looking for bearish godless, bearish bat, patterns to trade bearish, bearish breakouts like flags, consolidation. And when I measure the channel, I know that I have 450 pips, if I can say in time, that I have all this time to trade bearish. So from 110 all the way down to a 105.50, I know that I'm fine by trading bearish patterns all the way down here. Now we have a lot higher probability of the price dropping all the way down to the bottom side of the channel and moving up than to reverse anywhere. And here we have a direction. We have the direction from the top side of the channel to the bottom side of the channel. And this might answer some of you guys' question that, how do I know if I should be trading in a bullish trend or a bearish trend, or if the trend is bullish or bearish? Well, I decide on those trends this way. I would find pattern like here, the channel, and I know that once we go to the top side of the channel, I'll start looking for bearish patterns all the way to the bottom side of the channel. And once we go to the bottom side of the channel, I'll stop looking for bearish patterns. I'll cash out my profits if I have any open trades. But most of the time, when I'm entering a trade that's near the bottom side of the channel, I would make sure that I place my limits before, in case price bounces like here. See this wick? Well, on the 15-minute chart, this will look like a few candles going down, a few candles going up, and it's like you wouldn't even have the chance to exit if you don't have your limits before the bottom side of the channel. Price will probably just move too fast. Now, here we can see that actually we had a breakout below the channel. Now, of course, we can start trading below, but once we get stopped out, we'll know, okay, price may be coming inside the channel. Once price is inside the channel, we know that we can trade it all the way up to the top side. And again, we have this range of about 380, 400 pips that we can trade bullish. So we know that for the next 350 to 400 pips from this breakout, or if I should say break-in, we can trade bullish. Again, price is getting close to the top side. I go to a smaller time frame and I'll start looking for bearish butterflies. Bearish butterflies, head and shoulder patterns, bearish crab. Again, price comes, hits the top side, reverses to the bottom side. Once we get close to the bottom side, I'll start looking for bullish butterfly, bullish head and shoulders, and again and again. Those higher time frames are giving us the direction. And can you guys hear me? Is the audio still on? Just want to make sure. Okay. And this is how we would filter all the work. Here, I want to be looking, let's say, for bullish Gartling or a bullish butterfly or head and shoulders. Even if I get a bullish head and shoulders somewhere here, probably I wouldn't be even paying attention to it. If I get a bullish Gartling, why would I need a bullish Gartling if I'm in a downtrend? I'm not saying that the Gartling won't work, but we have a lot bigger chance, and the price will hit our limits a lot faster when we trade with the trend. Even if we see a bullish Gartling somewhere in a downtrend, yes, we might get like target 1 and 2 filled. It will probably take a while because we're taking this Gartling, but probably this is just a pullback. Yes, the pattern might work, but personally, I don't want that. I want, if I'm in a downtrend, to trade bearish Gartling because I have a lot bigger chance not to only hit my target 1 and 2, but also target 3, and it will take a lot less time.
Unmuted.
Can you guys hear me now? Okay. I'm experiencing some problems. My connection is gone off and on. Every time I lose connection, then my audio mutes automatically. But what I was saying is that here we have this resistance becoming support level. And yes, on the higher time frame, it looks like we bounced off this high. And it is possible that a price is it will move bullish from here, but my pattern was at the 86.1618, and also we have nice consolidation area right at that level. I will draw two horizontal lines if my chart let me. Now this consolidation, that's over a few days of consolidation. So I believe that price might actually come back to retest that level and actually take a send. So I'm still waiting for it. It does look like yes, price bounced off that level, but and also yes, that's a good eye chart, but it looks like bull crown is forming, but we would like to take a look at it on a smaller time frame. Out here, the 15-minute chart, we're in downtrend on a 15-minute. And it is very possible that we actually form this pattern here. If I can find, if market gives us a bullish candlestick formation at this level, I would like to enter bullish here, and this is near 109.90. If not, I still am going to leave my entry at 108.77. I can have both entries. But this is also a valid pattern, yes. And on its way down, it is possible that here we form something like this. This will be a bullish Gartley converging with this head and shoulders. We can see a lot of patterns converging at the same level. A lot of times price will do that. And this especially here is very possible because we have the support coming from those previous highs. There is a good chance that price will actually bounce up here. I'll even pull a Fib just to measure it. If we have bounced near that level, I will draw also a hypothetical sub-down fib. We have here 707 up to 1618 convergence. So yeah, this would be also a valid pattern. But we need to wait to see how price fluctuates and what swings we'll see in the next few hours, and that will help us make a better decision. Basically, the most important I was going for today is that we need to look for patterns at certain levels, and we need to know that we're supposed to be looking for some kind of patterns at some levels and then different patterns at different levels, not just look for any pattern anywhere in the market. Filter your pattern searching to look for reversal patterns at support or resistance. Those are head and shoulders, bat, crab, head and shoulders, butterfly, and crab. And then when we're trading, when we're trending, and look for Gartley and bat. So Gartley and bat are continuation patterns, trend continuation, and we're supposed to be trading those with the trend. And the reversal patterns, we look for those when we believe that we see a level that price might reverse. When we find that level, then we'll look for those patterns. And it will help you a lot, will save you a lot of time. It might actually help you with trading. You'll see a difference in your account. If you guys have any questions about this presentation, feel free to email me at fx-rbs@forexsimplified.com. Thank you everyone for attending today's presentation. I hope you guys enjoyed it and learned some new information. And I will see you guys tomorrow for the morning session. And if you have any questions, either email me or ask me in the chat room. Thank you, everyone. And those who are members, we'll see you next Monday. Have a great evening and safe trading. Thank you, everyone. Thank you.